If you look at history, war is often caused by parties that are desperate, and desperation creates desperate measures. We are in a situation where there are many countries who are major players who would appear to be becoming more cornered and more desperate. And who knows what their reaction might be if pushed.
But it's very different this time, isn't it? Because of nuclear weapons, of course.
Well, yeah, which makes the consequences even more serious.
And I mean, I just think about the news that we read and with the deep fake videos that are around and AI, and it just takes one person reacting badly to an AI video, and that's scary.
I had taken a strong view that I thought the New Zealand dollar was going to get devalued as well, along the same lines as what happened in the Australian market, and I'd convinced the senior people in the bank that we should take a significant position in that direction, and they also had to get permission from Hill Samuel and Co. This happened just prior to the banking licence. Devaluation occurred 17.5% when the Lange government got voted into power. That really boosted my stocks in the organisation because I was the one who pushed that transaction very heavily. It occurred. Bank made probably its biggest single windfall gain in its history at that point.
Wow.
So I had credibility all of a sudden.
Hi there. Thanks for tuning in. Welcome to OnRamp, a show about founders, innovators, researchers, and disruptors. My name is Ali Ukhani, and on this show, I'm going to be talking to people from all walks of life. I've spent most of my professional career in investment banking, helping raise millions of dollars for businesses shaping Australia's future. This has exposed me to a number of amazing people and has given me one really important thing: perspective. And that is what I'd like to share with you. Perspective that behind every breakthrough is a story, is a journey of missteps and turning points. So if you like the work that we're doing here, come and join us on that journey. Give us your support and help us further the mission. This is OnRamp.
I was born to do.
Welcome, Richard.
Ali, good to be here.
Thanks for doing this.
I'm very excited. It's not something I've done before.
It's one of those things, I feel like you're one of those people where you have a conversation and you have the knack to throw somebody off autopilot. And I mean that in the best way.
It's not intentional.
I remember, because we've known each other, 4 or 5 years now. And the first time we got up, I remember coming away from that conversation thinking, wow, I gotta sit down and have a coffee with this guy one-on-one. And then we've had a few conversations over the years, which I'm really happy about. So, thank you so much for doing this. I'm gonna give people who are listening a bit of context and a bit of background on your story because it's been quite an illustrious career. I think both from the standpoint that you've come into the markets at the start of your career at a very interesting time. It's not super unlike, you might say what's happening in the markets today. But you started out at Hill Samuel. That was in the late 70s, I believe.
That's it, 79.
Yeah, and then Hill Samuel, of course, eventually became Macquarie. You went on to become the executive director, global head of equities, and then ultimately joining the executive committee at Macquarie. So that's, it's been quite a journey, obviously, going through, I believe, the 80s, 90s, leaving ultimately in 2001.
Yep, that's right.
And then setting up your own fund, that Shell Cove, which you run to date, alongside your other investments and ventures, including the turnaround of Range International, which is an ASX-listed company, which is how we first crossed paths.
That's right. It's been a journey.
Yeah, it certainly has. So let's go back to the start. What was childhood like?
Well, I lived in Sydney in a suburb called Mossman, which at the time wasn't nearly as glamorous as it is now. So I was living in Mossman from birth, and I was the product of a middle-class family, an American immigrant father and an Australian-born mother. We had a very Australian upbringing, and I went to a private school in Mossman called Mossman Prep, and then went on to a secondary school called Shaw in North Sydney. So nothing particularly different or spectacular about that. What did happen that was very important to my upbringing was that my father died when I was 9 years old, and died suddenly, which of course is very shocking for any family. I had 3 siblings, and my mother, and that just drew us closer. But what it did do is it drew my grandfather into our family very closely, and he was himself a footwear entrepreneur. He had a long history of importing women's fashion footwear into Australia, and he was very ingrained in the Italian fashion industry. But he also had interest in finance. He was the head of that company, and by extension, he was interested in finance. And I was one of the youngest of his dozen or so grandchildren. And he, because of the death of my father, took a real interest in me and my siblings as well. So, and he was the one who really encouraged me to take interest in financial markets, which they weren't really called then. It was more the stock market, because that was basically the only financial market there was. But through him, that's how I developed my interest.
And that's your mother's father?
My mother's father, correct, yeah.
Gotcha. And what was it like spending time with him as a kid? Did you go with him to the store? Did you sort of learn how a business works and what to look for, what not to look for?
Yep, especially my next sibling up and I, we worked in the family business every Christmas. So we'd be there for 6 weeks, and initially when we were smaller, we would just be delivering things for him around the city. His business was located in Clarence Street. And then as we got older, but we were still working in the family business during the school holidays, we would be in the warehouse, emptying containers and filling containers and doing invoicing. And it was rough and ready, but it was great fun.
And you were working there until what age?
I think I probably had my last session there when I was at university, because I remember, I think probably the last time I worked there, I'd convinced another guy named Mick Moore, who became the managing director of Macquarie Bank, who needed some part-time work during the Christmas holidays. So he came and worked with me.
Amazing.
Yeah.
Amazing. And at what age did you actually start with your grandfather?
Started trading? Mm-hmm. Well, I think he had an ASX-listed company called International Footwear, which I used to follow because I used to like reading the financial press from a very young age. In fact, I remember when I was in probably the 3rd or 4th class, every kid comes up to the front and gives a 5-minute talk on their favourite pastime, their favourite pursuit. And mine was the stock exchange, which was a bit unusual because most of the kids didn't know what the stock exchange was. And I'm not quite sure, apart from his influence, what drew me to that. But that's nonetheless what I gave my class talk on when I think I was in the 4th grade. And it really built from there. The first, and by that time, he had given me a very small amount of money, and he had put me in touch with a local stockbroker who lived locally to us, was known to the family. And I used to call him up and call him Mr. Watson, and he would tell me what he thought I should do, and I would dutifully do that. And it was probably not for quite a few years that I started to do my own thing rather than just listen to him. But I learned a lot from first of my grandfather, but then secondly from the broker he put me in touch with, which was an ASX broking company called Mears and Phillips.
Okay. That's really interesting. I mean, getting that kind of education, very hands-on at an early age, it's funny. In my own parallel, I suppose, my interest in the stock market came from my mum's dad. So it's something that I do relate to. What about your mum? Did she work in the family business, or was it sort of, I'm going to chart my own course?
No, she did. She didn't work prior to my father's death, but after he died, it was sort of pretty much all hands to the pump. Mm-hmm. And she herself was capable in this area because she'd grown up in that environment. So she took on a particular line in the family business, and at that time, the business was the sole distributor of Ferragamo footwear in Australia.
Okay.
The Ferragamo family is a well-known Italian fashion house now. At that stage, they were pretty much only footwear. And my mother, Sonia, got to know Ferruccio, who was the head of the family at that stage, the business part of the family. And so she would travel often to Italy to look at their most recent line of shoes and work out what would work in Australia, bring back samples, and then the retailers would come to our showroom and work out what part of the Ferragamo range they liked.
And did you go on these trips with her?
No, I never. Well, at the end of high school, all our family went to Europe, and we went to the Ferragamo mansion in Florence, which was quite an experience because
I can imagine.
they were like Italian royalty. And I remember my brother and I, we were wandering around Florence, and we had to get back to the hotel by a certain time, and we were completely lost. But we eventually found the Arno River and followed the Arno River back to our hotel, so we knew where we were. But we arrived at the Ferragamo mansion, and my mother said to us, please don't embarrass me. And we sat at this table, which literally had hundreds of pieces of crockery and cutlery and glassware on it. And I don't think we really know we didn't know where to start. But it left a lasting impression on me because they were extremely welcoming family in a different stratosphere to us and of different upbringing than us, but they were very, very welcoming.
Amazing. So you graduate, you decide...
graduate from school, yes.
Yeah. And then you decide that I'm going to work in financial markets. Was that the first instinct, or was it I'm going to go to the family business?
No. I was doing a lot of trading even by then.
Mm-hmm.
But I think because I took an interest in politics, and at that stage, in 1972, I think it's 1972, the Labor government came to power. Mm-hmm. And I was quite swept up in that Gough Whitlam, its time type of thing. And I think it was a bit of a rebellious action against my mother, who was quite conservative, and we lived amongst a very conservative set of people. Mm-hmm. And so maybe that was just a normal teenage rebellion. But I got caught up very much in Labor politics, and my goal leaving school was to become an industrial lawyer, mm-hmm. An advocate of the trade union movement.
Okay.
So I enrolled in commerce law at New South Wales, but over the next 3 years, that desire to do that really fell away.
Before we unpack that a bit, let's just take a step back. What's the mood of the nation when the government comes in? What prompts the rebellion? Why do you think you relate more to the incoming government than, say, people around you?
Well, I think Australia had its fill of conservative governments. Mm-hmm. And it wasn't that they were hopeless. It's just they weren't offering anything new and inspiring. It had been a long time under the Menzies, mm-hmm. Holt, Fraser era. And it literally was time for a change, which was their slogan.
What age are you at this stage?
So when I left school, it was 76, so I'm 16 or 17 then.
And you're already trading?
Yes.
What are you trading at this stage?
Well, primarily resource stocks.
Mm-hmm.
I remember my first foray into resource stocks was a company called Gingelic Minerals, and they were a tin miner in Australia. And I think they were pretty hopeless, actually. And I don't think I ever made money out of Gingelic Minerals. Mm. But, I would be focusing on them every day. And then I had a couple of wins from some things that my stockbroker put me into, which was nothing really of my doing, but a couple of emerging Woolworths Coles type companies, wholesaling companies. And
What was the price per share back? I mean, surely I know I'm jogging your memory a bit, but ballpark, do you remember?
well, I know Gin Minerals was it was a penny dreadful,
Yeah.
but I did attempt to trade in mainstream as well.
Yeah.
So I had a range of stocks. The 70s after the big credit squeeze in the mid 70s turned out to be a pretty good time to invest. So obviously, when you're winning, you think you've got special talents, and you continue to invest. By the late 90s, after I'd left school and was at university, I'd started to very much focus on commodities. And my first real win was in the sugar market. And by way of luck, in one of the subjects in the commerce part of the commerce law degree, we were looking at the International Sugar Agreement, which was, in those days, the sugar market was pretty much controlled by bilateral agreements, or production was controlled by bilateral agreements. And even my poor reading of economics made it obvious that with this controlled supply, there was a real chance, in the case of crop failure, that there could be a big spike in prices. So that started to transpire. And I went to a broker who I'd been introduced to on the futures side of things, who had the ability to trade options on the London Sugar Exchange. And I started to buy sugar options, and the sugar price exploded, really by good luck, I think, rather than good management by me. And as a young guy, I made quite a lot of money. And from there, then I started to focus very much on gold and silver, which were just beginning their big ramp up in the mid-70s following the oil shocks.
How old are you when you execute this trade?
17 or 18.
Wow. And how do you go about it? Because I imagine it wasn't as simple as opening a CommSec account.
No, it was probably easier because, you didn't have any 100-point checks.
Yeah, sure.
So I think I just saw an advertisement in a newspaper I also used to subscribe to the forerunner to the Financial Review, which was called the Sydney Gazette. And the Sydney Gazette was a magazine that came out only periodically. It didn't come out every day. And in the Sydney Gazette, brokers advertised. And so there was a broking firm, and I do remember their name still. They were called Bailey, Herbo and Mazurell. And
sounds like a law firm.
Yeah, it does. But I rang up the line, and I was put on to a guy named Desmond Brooke, who was the principal of that company, and I introduced myself to him, and he soon found out that I was 17 or 18 years old, and I don't think he was terribly interested in pursuing the conversation, but we did, and I did open an account with them, and they're the ones I did my sugar trades with, and then subsequently I did quite a lot of gold and silver trading with them.
So did you go back after the sugar trade and go, how you like me now?
I think he thought it was lucky.
So at what point do you then join Hill Samuel?
So I'm 3 years into my degree and not really enjoying it. I'm doing okay in the law subjects, but I don't pay much attention to anything else. So I'm getting my fair share of Fs. And
Why is that?
well, I'm just not very focused. I'm spending more time at Terry Page's pub down at Coogee Bay rather than in the lecture theatres. So I wasn't a terribly attentive student when I was at university. I was having too much fun.
Is that because generally you thought, is it rebellion towards structure, or is it more, oh, this just doesn't excite me?
It just doesn't excite me. No.
Yeah.
So what then occurred sometime in, I think, probably my second year of university, there was, again, advertisements in newspapers advertising for floor traders on the Sydney Futures Exchange. And there were these courses they were running. So you would go in at lunchtime and they would have dummy sessions on the floor of the Sydney Futures Exchange. And you would simulate what was happening during the proper trading hours. And the idea was to recruit people to become floor traders. And there was a gallery above the floor, and a number of the broking houses would always send representatives to observe the people on the floor and who they might think could cut it as traders. So I did that course. I think it only lasted a couple of weeks, and I had discussions with a few people, and really I didn't have any idea about Hill Samuel at all.
Mm-hmm.
And it was only I had the best discussions with them. A guy named Clive Carroll and also Phil Gardner, who were the pioneers of what's called the international division at Hill Samuel.
And I know Phil. He's a great guy. He
was a great guy.
Amazing guy.
And Clive's a great guy too. In fact, I was just talking to Clive last week. They were way ahead of the pack.
Mm-hmm.
So I had a number of interviews with a number of different people, and Clive and Phil amongst them. And I said to my mother, look, I really want to leave university and I'd like to join this company called Hill Samuel, because they're doing this gold arbitrage thing, which I was sort of doing myself as well, but on a very tiny scale.
Mm-hmm.
And my mother, she wasn't happy about that. But she said, well, let me talk to my accountant about it. And I went, really? Your accountant? But her accountant, his name was Ken Holman, and he said to her, well, I know the chairman of Hill Samuel, and his name was, I think, Stan McCabe. I might be wrong with that, but I think that's his name. So Ken Holman spoke to the chairman of Hill Samuel, and Ken said, oh, well, this guy's fantastic, and this is a really good up-and-coming company. If your son's going to do this, he should do it with Hill Samuel. So she then got behind the idea, and that was that.
Amazing. So you get the blessing, and then you go and join Hill Samuel. I actually found a picture. I don't know if you recognize any of the people in the picture here, but this is from your old floor at Hill Samuel.
I should have my glasses. Yeah, well, that's Clive Carroll there. David Waghorn, that's me in the background there.
Oh, amazing. You're there. You're in that picture.
Yep, Robert Walker. Yeah, this is so these are all people in what's called the international division.
Transport us back to that floor. Imagine you and I are in a little time capsule. What's that look like?
Well, it was very similar to what trading floors look like now, except that it was much more simple. There were desks, usually circular or octagonal or something, but the idea was to have sort of as much line of sight to people as possible, so you could talk or yell at them.
Mm-hmm.
And then there were usually screens on top of the desk, and there was we did have those phone systems, the early stage phone systems, so you could pick up lines from that other people were talking on. Really very similar, except that the communication systems were really in their infancy. I remember the first Reuters screen that we got,
mm-hmm.
and we only had one. And so people would crowd around the Reuters screen trying to pick up what the price of gold was in Hong Kong or what currency rates were. So the communications were at a very immature stage.
How many Reuters screens would have been there in Australia at the time?
I think we would have been in a very early stage in this.
Yeah, wow.
So there were the way the market was structured then, there were merchant banks, mm-hmm. and there were banks.
Yeah.
And we were a merchant bank, of course, having no banking license. The banks were extremely conservative in what they did. So all the stuff we were doing, futures and arbitrage, whether it be the currency hedge market against what's called the official market. So this is pre-devaluation days,
mm-hmm.
pre-deregulation days.
Yeah.
And we were operating in both the grey market and the real market, and so we needed the information much more than they needed the information.
Because you're making the market.
Because we were making markets, but we were also arbitraging the grey markets against the official markets.
So The communication systems are super analog. Time differences, obviously, because you're dealing with London, presumably, on a lot of commodity-oriented stuff, LME. Give us a sort of day in the life. What did that look like?
Well, most of our interface was with in the commodities business, which for us was almost exclusively gold and a bit of silver. Our daytime interface was with Hong Kong, a little bit of Singapore. So the futures market would open at, I think, 9:30.
Yeah.
And it was a rampant gold bull market. And Australians took to gold futures with gusto. They were very, very into it. And so much so that because Australia was somewhat isolated from the international markets and people didn't really know about the US dollar gold price apart from the fact what they read in the newspaper, and because the gold contract was denominated in Australian dollars, people didn't really understand the connection between the US dollar gold price and the Australian dollar gold price. What they understood was that it was going up. So the Australian dollar gold price used to wildly fluctuate around what you'd call its fair value. And that's what we did. So the day would start with the futures market opening. And if it had been a positive night, let's say gold went up $20, which was a big move in those days, then the Australian market might go up $40 because of enthusiastic speculation. So we would be selling those futures contracts in anticipation of buying the physical gold or deferred gold or unallocated gold from the branch in Hong Kong of a London bullion house. So people like Johnson Matthey and Macquarie Goldschmidt, who are both London Ring members. But the problem was that in those days, you couldn't call someone overseas directly. You had to book your call through the operator. So you'd ring the operator, you got to know all the operators by name. And, it'd be, hi Beryl, can you put me through to Johnson Matthey in Hong Kong? And it could be 15 or 20 minutes before she called you back with a connection. And meanwhile, the price has gone well against you.
Yeah.
It always seemed to go against you. So telling people about that now, especially my children, they can't believe that you couldn't instantly get on your smartphone and establish a connection with someone in a foreign country.
What sort of gold prices are we talking about here?
Sub $300 US. So that run up in the 70s to early 80 took it from in the 100s to almost 900 before that bull market finished.
Let's talk about that time a bit because, I remember one of the first conversations we had over coffee, you told me about Jeremy Grantham. And I went back and obviously went into a rabbit hole with him and Ray Dalio. And it's not a big call to think that the market today is in some ways similar to the market of the 70s and the 80s.
Which markets do you mean?
Generally, we're seeing people line up outside stores to buy physical gold. It's happening everywhere, including, in places like Sydney and Melbourne. Gold price is obviously, all-time high. What parallels do you see? Because obviously you entered the industry at that very time. Having seen how it played out then, what sort of parallels do you think there to today, and how do you think it'll play out?
Well, there are parallels because up until recently, the public really wasn't in on this. Although many people knew about gold and silver, I don't think they were big physical buyers themselves. So there are parallels in that respect, but it's very, very different environment, in my opinion. I think when you look at the big picture numbers, these are approximations, of course. It's estimated there's about 216,000 tonnes of gold, above ground gold, in the world. And the vast majority of that is in the form of jewellery. And actually, the vast majority of that jewellery is owned in India, interestingly enough.
Yep.
So the Indians are way ahead of the game here.
Yep.
And the Chinese and associated Chinese cultures around the region not far behind, but not really Australia or many Western countries, despite the fact that the central banks had a lot of gold. So yes, there are speculative similarities between the 70s and the 20s most recently, but the backdrop to the fundamentals and the reasoning between those two environments and why you buy gold, I think are really starkly different.
Do you think so?
Well, you go back to the 80s. There was government debt, but it was a fraction of GDP.
Mm-hmm.
And now you have average government debt, and average is a bad measurement, but it's well in excess of 100% of GDP. And
at least for most major economies, it's at least double.
Yeah, it's a pretty frightening statistic. And you would probably say, well, that doesn't matter too much if you're running budget surpluses, but there are no budget surpluses except in very rare instances. So when you have both massive accumulated debt and no restraint in spending, you have an impossible formula that's only solved by very substantial increases in taxation, which of course have their limits, or some other major reset, some other major financial reset. And I think that's what is going to happen in the next period of time. These things typically happen slowly, then suddenly.
Mm-hmm.
And I think we're still in the slowly phase because there's still a lot of institutional money that doesn't believe that sovereign defaults are likely, except with fringe countries and economies. I personally think that the numbers are becoming so crazy that there is no other option but for sovereign default.
It's interesting because historically sovereign defaults happened as a result of war. And if you look at the last major crackdown that happened, it was obviously World War II and America coming to the forefront and Britain taking a step back, having nearly bankrupted itself. And, the story can go on with, I suppose, the Dutch before them, the Portuguese before them, so on and so forth. Do you think, as things stand, America has a chance of not following that same path?
Well, if you look at history, and I'm not a brilliant historian at all, but war is often caused by parties that are desperate. And desperation creates desperate measures. If you look at the rise of the Nazi Party in Germany, that came from desperate situation.
Mm-hmm.
If you look at the rise of Imperial Japan, that came from both a desperate situation and also a fervent ideology that was stirred up by people who were desperate for geographic expansionism. So we are in a situation where there are many countries who are major players who would appear to be becoming more cornered and more desperate. And who knows what their reaction might be if pushed.
But it's very different this time, isn't it? Because of nuclear weapons, of course.
Well, yeah, which makes the consequences even more serious.
And I mean, I just think about the news that we read and with the deep fake videos that are around and AI, and it just takes one person reacting badly to an AI video. And that's scary. Let's rewind. So we're back at Hill Samuel. Hill Samuel becomes Macquarie. What's that transition like? And what's that transition like for you?
Well, it was very interesting, and everyone was very excited by it because we'd seen the advantage that what we used to call the trading banks had over the merchant banks. They had much greater access to cheaper sources of funds, and also the Reserve Bank window for buying and selling currencies. So from the international desk or the trading side of the business, it was going to be much easier for us to participate. The trouble is, nobody knew who we were. It was hard enough being Hill Samuel. They owned the majority. We were Hill Samuel Australia. It was majority owned by them, Hill Samuel and Co. UK, who weren't. They were widely known, but they weren't an incredibly substantial financial player. And so we were living in their shadow, and we were dealing a lot in Asia, especially trying to break into the Japanese markets, which were very significant in the 80s, leading up to the things that happened in the late 80s to Japan. So when we became Macquarie Bank, the first mission we had was to meet and greet as many banks as possible. So I went on lengthy trips, one in particular to Europe and one also in Japan and Hong Kong with various colleagues, and we would just for weeks and weeks and weeks walk around to every major institution introducing ourselves so that they became familiar with it, so we could get credit lines to deal with them. And it was I think there was an attitude that we were upstarts. We were doing things way beyond our size, maybe way beyond our perceived capabilities. And so it was hard to establish those credit lines, especially when the institutions we were talking to, for instance, the Swiss banks or the big Japanese banks, are very slow moving in their acceptance of new counterparties.
Set the scene a bit for me. So when Macquarie comes onto the scene, who are the other players in the Australian market?
In our particular space, in the foreign currency space, because by the mid-80s I was now working in the foreign exchange division. I'd moved away from bullion. So you had the major trading banks, primarily Westpac, Commonwealth Bank, which was very, very institutional. Westpac was a bit more fast-moving. National Bank was very, very traditional and slow-moving, and ANZ, well, virtually didn't exist in the sort of business we were in. And then you had the merchant banks like SocGen, BNP, and Citibank, Bank of America, well-recognised names. They were the major opposition for us, even though they themselves, they were gradually getting banking licence as well for their Australian subsidiaries, but they were really the opposition.
How hard was it to get a banking licence back in that day?
Oh, initially it was extremely difficult, but then it became much easier. We had to jump through a lot of hoops to get a banking licence. And even though we had no branch network, we were required to have a branch in the two major capital cities. So that wasn't so difficult. But I do recall the project was run by Alan Moss, and he was helped by John Hewson, who had worked with the Reserve Bank of Australia. He was also a professor of economics at one of the Sydney universities. So we had this panel of experts helping us, and it was a very lengthy process. And I do remember the night we got the licence, there was definitely some celebrations.
So how old are you when you're out there on the road shows trying to win some business?
Well, it was mid-80s, I was 26. And interestingly, the guy I spent months and months in Japan with was Russell Kennett, who now works with me in our manufacturing business in Indonesia.
Amazing. So obviously as a kid, you've been to Italy, you've been to the Ferragamo house, you've sort of, I suppose, cut your teeth there and in a sense know the right way to go about, for lack of a better word, schmoozing, if you like. Now you're out there, you're 26 years old, obviously speaking to some of these big institutions, steeped in tradition, especially in a number of APAC countries. What's that experience like?
Well, it's quite it's quite painful because these guys are not nearly as interested in us as we were interested in them.
Yeah.
So getting their attention was always quite difficult. So we would have to work out ways around that. So, for instance, in a lot of our travels to Japan, we would take John Hewson, who was quite well known to Japanese financial markets because he would take tours of university students to Japan regularly beforehand. So he was always a door opener for us. But that we really required that level of additional help because by ourselves, we weren't that much of an attractive proposition for them.
And what's your risk appetite like at this stage?
Well, it's a good question. The risk appetite, we were doing risky transactions really from the 70s. And if you look back at the biggest risk the bank took from when I joined was this gold arbitrage business. So what we were primarily doing was we were buying gold from London gold houses and we were selling futures because the premium was almost entrenched because gold just kept on going up. And then periodically you'd have a sell-off and all the speculators would sell their futures and you'd reverse the transaction. But for several years, it was one-way traffic. And so we had built up a gold book, which at the time we thought was massive. But the problem was that the gold we were buying in London was not margined, but the futures we were selling in Australia were margined. So the margin calls on Hill Samuel were becoming quite worrying for the parent.
Especially if you can't reach people while the price is changing.
Well, it wasn't that we had exposure, it's just that we had massive margin calls, which they were supporting.
Yeah.
And they were very big.
And what sort of funds under management did Hill Samuel have at the time?
Hill Samuel was not a funds manager at that time. So we were only using proprietary money.
Yeah, okay.
But all these activities that I was involved in really for the first 20 years of my career, or 25, were using the bank's money.
Right. And what was the first time that you went through a financial crash?
Well, the first instance was the gold crash.
Yeah.
So that happened in January 1980, and the market reversed several $100s in one night. And so everyone the following day was a seller, and really we were the only buyer.
Why was that?
Why were the only buyer?
Why did gold price crash?
Well, I think primarily it had run excessively, but the real catalyst was that the various exchanges jacked up initial margins to such levels that speculators were unable to maintain their positions.
So everybody just got margin called?
It became too expensive to hold positions. And then you might recall a similar event that happened with the Hunt brothers where they had tried to corner the silver market and they had succeeded, except for the fact that the members of COMEX decided to gang up on them and make their holdings just impossible to hold.
Why'd you buy? What made you say, the world is selling, we will buy?
Well, we were just unwinding positions. So, we just had a massive position. So we were buying futures, and then as soon as Hong Kong opened, we were selling all the gold we could.
Yeah.
So there was just an unwinding of a trade.
And then you move out of bullion after that, and you get into, obviously, with Macquarie, Forex.
Yeah, initially with Hill Samuel, and then that became Macquarie. Had some interesting transactions along the way as the Australian market, the devaluation and the deregulation of the FX market had occurred before I shifted from bullion. But then the same thing happened in New Zealand. And by that time I was a trader on what they called the third currency desk. So I was trading foreign currencies against the US dollar. And I had taken a strong view that I thought the New Zealand dollar was going to get devalued as well, along the same lines as what happened in the Australian market. And I'd convinced the senior people in the bank that we should take a significant position in that direction. And they also had to get permission from Hill Samuel and Co. This happened just prior to the banking license. And that the devaluation occurred, 17.5% when the Lange government got voted into power. And that really boosted my stocks in the organisation because I was the one who pushing that transaction very heavily. It occurred. The bank made probably its biggest single windfall gain in its history at that point.
Wow.
So I had credibility all of a sudden. Maybe I had a bit before, but I had even more then. And so at that time, I'd been dabbling with options on various products. While I was on the futures exchange, actually, I'd started to quote options on wool and then on gold and cattle. And so I knew a little bit about the Black-Scholes models, and I was supported by a group of financial mathematicians we had in the group. And that was really what I wanted to pursue. I wanted to pursue options trading. So we started to do currency options, we were doing bond options, we were doing commodity options, and we started a specific desk called the options division.
What are you doing all your research at this stage? I mean, you've obviously got analysts, but you need to be able to understand the work that they're producing. And you've just done a 1-week training course, dropping out of college essentially. Where's your knowledge coming from?
Well, Tony Berg, who's the MD, and David Clark, who was the chairman, or at one point they were joint MDs, they both believed a lot in the capabilities of the US investment bank. So I spent time in New York with Goldman Sachs. I spent time with Salomon Brothers. Mm-hmm. Salomon Brothers were the options specialists. So I really had a great time with them. And because I was just an Australian from some backwater bank, mm-hmm. they were unafraid to tell me anything and everything. So that was really useful. So the first thing we had to do is we had to build not just pricing capability, but also we had to build management models. And that was all done by our group, which was called Financial Maths in those days, and mm-hmm. that was headed by Dr. John Green. And without those guys, we couldn't have done what we did.
Let's talk a bit about the Australian economy at this point in time. And now I'm saying more so the last 20 years. Australia has gone through a period of record low interest rates. Housing is obviously a market that's got people divided in terms of whether it's inflated or not. There seems to be a consensus that there's an underlying shortage of supply. What do you think this period of low interest, along with expanding credit in Australia, which is something that hadn't really taken off. I feel at least until the 80s, Australia was a fairly conservative economy, much unlike the United States. But now we've got 20 years of record low interest rates. We've got expanding credit. We've got shrinking income and high inflation. In some senses, very much like the 70s. What do you think that spells for the Australian economy?
Well, it's puzzling, isn't it, that the Australian interest rate environment is now generally trading at a discount to US interest rates when we have such a demand for foreign capital in order to fund our deficits. Because when I bought my first house back in 82, my mortgage was 18.25%. And that's pretty scary. A lot of your salary is being consumed just for mortgage payments. And if I hadn't had the support of my employer for that, there's probably no way I could have afforded to make that loan. Asset prices were moving fast, a bit similar to what is happening now. But it is puzzling how interest rates are so low when you look at the risk profile of all the borrowers, especially the sovereign borrowers. And I really don't have a good explanation for that.
In a sense, it feels very similar to subprime lending and what happened in the early 2000s in the US. I mean, I don't know. Do you think it's potentially leading to a default cliff?
Well, you have to remember Matt, as I'm sure you're fully aware, that the Australian real estate experience in the last 10 years is quite different than many, many other countries. Many countries have firm real estate markets, but Australia is quite exceptional. With the exception of Melbourne, most capital cities, Sydney, Brisbane, Perth especially, has been spectacular, as you know. But if you talk to people in offshore centres, a wide variety of offshore centres, some will tell you that real estate's been stagnant to down, and others will tell you that there have been gains, but nothing approaching the levels in Australia. So Australia, by virtue of its difficulty to introduce new housing supply and its very significant positive migration, has created a perfect storm for what we're living now.
Do you think it's worth buying property for young people? What are you telling your kids? Do you say save up and put a deposit and do the whole 9 yards?
Well, I think a lot of kids, university age, can't imagine how they can get into the market in the places where they've been used to living, because they have a sense of the cost of debt, because some of them now have HEX debts, and they see how long it's going to be to pay back HEX debt, and they can't imagine loading housing borrowings on top of that. So it's not a happy topic to talk to young kids about, because I think they feel a bit of hopelessness.
I think there's quite a bit of hopelessness, especially around housing. How do you know, though, that a system's broken? I mean, what signs do you look for? What signs were you looking for, obviously, back in the 80s as gold came crashing? And are some of those signs still there today?
Well, if you look back at the GFC, I think that was the best illustration in my life of a system that was actually broken. All the other big run-ups in price, like the gold price in the early 80s, the stock market into 2000, the stock market now, gold now, they're fueled by exuberance, but apart from AI, where I think there is very dubious capital investment, I'm not quite sure what the return on this massive capital investment is going to be. But I don't feel like we are so much in danger of a systematic failure, or we certainly weren't with those other run-ups that I talked about. So there were companies that went broke, the Enrons of the world. But I didn't feel like we were in danger of the system breaking like it was in 2008, where there just were so many fragile institutions. Now, maybe I'll be completely wrong. In 1 year's time, there'll be a whole bunch of names that bring down major economies so that growth reverses and becomes significantly negative. But the calamity, the major calamity I've witnessed in my life, which was not just a market correction, it was a calamity, only rescued by extraordinary government intervention in many, many countries, including Australia, was the GFC.
I do agree with you in some part in that I think if there is a bubble, it will be different. And my rationale for that is private credit's just grown immensely over the last few decades. And so rather than having maybe 5 or 7 institutions that are holding all this debt, you've got this debt flattened out and spread out way lateral in that sense. But the problem for me fundamentally that I think is credit. You know, back in the day when, say, currency was gold backed, you had some limitations. Once that decoupling happened, now currency really to some extent doesn't, have value beyond perceived value. And I think a lot of people today that are holding things like Bitcoin would make that argument as well. But fundamentally, then, when you have hundreds of organizations across Australia, say, holding private debt that have, to some extent, a lower standard, and I'm not saying subprime, but a lower standard of qualifying their debt, how does that systematically impact the economy when the ability to pay back starts going down? And fundamentally, that can happen if people start losing their job.
Sure. So it's a great question. And the reason I think that there hasn't been a major hiccup except for COVID for many, many years is the absolute readiness of governments to intervene directly to ensure there's enough liquidity to just push these problems further down the track.
Yeah. It's to the next election, isn't it?
Well, these people are elected officials.
So let's go back to your Macquarie days. You were obviously in charge of a lot of offshore expansion. We're in a place now where we're seeing increasingly geopolitical tension, especially with, say, China and Australia. Did you travel to China?
No, we'd never. In my day, we didn't have any operations in China. We had operations in Hong Kong.
Yeah, of course. What's your take on the relationship at the moment with Australia and China?
Well, I think it's a relationship of convenience. And it depends who you're talking to when about what the answer is you're going to get. It's interesting how the current government is able to talk to the Americans and build friendly relations while at the same time talking to the Chinese and building friendly relations. But it may not be possible to long term to sustain for us to play both sides of that argument.
And now it seems like the American and the Chinese are also building relations.
Well, if words count, yes.
Yeah. Let's talk a bit around your career ends at Macquarie in about 2001. Why Shell Cove? Why start your own funds management business? What are you thinking at this stage? Do you feel that I want to do what I was doing at Macquarie, or I completely want to shift laterally? What's the thought process?
Well, it wasn't so much wanting to build a funds management business, it was wanting to build a hedge fund. And I had a very specific mantra, and that was to build a hedge fund based on a global macro thematic using derivatives to express those global macro views. Because I fundamentally believed and still believe that in a trend situation, the optionality is very undervalued. So if you have big moves in underlying currencies or commodities or stock indices, that the upfront cost of the optionality turns out to be very low compared to the amount of leverage it offers you and the risk management capability it offers you.
So you start Shell Cove in 2004.
I think probably started trading in 2005, but yeah, we got our license in 2004.
Just pre-GFC?
Yep.
What are you trading?
Well, we had a number of thematics going at the time. We were initially, our big thematic was copper.
Okay.
We believed that the copper price fundamentals were very bullish, and so we chose to reflect that thematic through certain Australian and international equities, and in turn through optionality on those equities. So we had initially very substantial success because we were long stocks like BHP, which traded from $15 up to $40, and Western Mining, which doubled in value, and various offshore copper producers as well. So that was a very good trade, and it was a good trade because, and it's very similar to the gold market now, the analyst cohort refused to believe that the copper price, which had risen from $1 a pound to $4 a pound was sustainable at that level. So they were still using valuations of much lower levels for their target levels for these companies. And that was the advantage for us, in that we were looking at spot prices as being the prevailing price and the forward price, and you were getting very different valuations, forward valuations compared to the market prices.
I mean, I can imagine if you put that into a Black-Scholes model, the outcome of the option entirely changes.
Yeah, well, the options were just so cheap. But the trick was buying enough duration. And that's where, ultimately, just to fast forward, that was the problem we had with the fund. We never had enough duration because we couldn't find market makers who would give us enough duration.
So for people that don't understand that concept, can you flesh that out a bit? So what's market making and what's essentially a forward or future contract?
Okay, so we're a price taker in our role, which means we had to find someone who's prepared to sell us what we wanted. And what we wanted was exposure, say in this example, to BHP, but not just for 3 months. We wanted it for 1 or 2 years, because timing is everything. And you might think you've got a winning strategy, but then markets do what markets do, and all of a sudden that trade doesn't pay off during that 3-month period of time. You just happen to come across a correction. So you need duration. And you need duration because that gives you the time to work through the corrections. And that's the key to this strategy working, but that ended up being our biggest problem.
So with that then, so you were obviously trading a number of thematics at Shell Cove. And was it primarily, would you say we're more long or more short?
Well, in the case of the commodities thematic, we had a strong long bias.
Yep.
We also had a US home builders thematic,
Okay.
which is sort of similar to the subprime trade, but we didn't get onto the subprime trade, which I wish we had.
Yeah.
So what we had is large amounts of call options on US home building stocks covered 1-for-1 by short stock. So we were manufacturing puts because the puts were very hard to buy. And so we had huge exposure to the US home builders falling over, which they eventually did. But unfortunately, again, even though that was sort of that was a profitable thematic, we didn't have the duration to support the trade through the GFC.
How hard was it? I mean, to get in touch with market makers at this point in time? Obviously, you would have had to deal with US financial institutions for this particular trade. Because, I mean, we've all seen The Big Short, and even Michael Burry finds it troublesome to, get some of these contracts securitized at the outset. What was the process like for you?
Well, it wasn't difficult to get short-term exposure to the downside, but it was very difficult to get long-term exposure to the downside, and that's where the subprime trades work so beautifully.
What was the biggest trade? And then what was the biggest failure?
Well, undoubtedly the biggest trades we did were in our initial and most profitable thematic, which was essentially the Australian commodities thematic. And then, ironically, the worst trade was using the futures market in copper to hedge part of the success of that trade. Because in the lead up to the GFC, there was a squeeze on the copper market. And we had sold forward copper to hedge out our long exposure to the various copper miners. So we were buying the equities and selling copper because the equities didn't reflect the copper price.
Yeah.
And there was we were selling futures 3, 4, 5 months out, and unfortunately didn't roll them because the forward months were going up faster than the back months. So the market went into what's called backwardation. And that backwardation is reflective of a tight supply situation, and that backwardation turned into a squeeze, and we were short. We were short the futures. The equities weren't responding as much as the copper price was moving because people didn't believe it was a permanent arrangement, and that ended up being pretty ugly.
I imagine short squeezes generally are.
Yeah, and we had real trouble getting those copper futures back, and our brokers were very concerned because we had shorts which we were unable to deliver against, and it was touch and go.
What year is this?
2006.
Okay, so pretty much a year after you get your license. Wow. Okay. I mean, copper has obviously since then been an amazing performing commodity, and as a lot of people tell me, if you want to look at how the overall commodity market's going, look at copper and not gold. But let's talk about coming out of then the funds management side of things, and you make now a pretty left of field shift. You decide to go and run a manufacturing company called Range. Tell us a bit about what this company does, how you got involved, more importantly, why you got involved.
Well, so after the GFC, we gave back the funds we had under management. One or two of our clients withdrew their funds. One withdrew their funds because they had a substantial loss with a Canadian oil hedge fund, and they essentially got out of hedge funds of our type. And then once you lose critical mass, everyone else wants their money back because they appreciate you're not going to be able to operate profitably with any size of employees. So we give the money back, and we ended up just having our own money, essentially, the directors of the company. And at that point, my wife and I have decided we'd like to take our young family to Indonesia to have them do primary school in a foreign country.
Why?
Well, I've got 4 older children, and they all had good educations, but they had educations in Sydney schools, and I felt that it would be good to have a different experience, at least for primary school, to open their eyes to different nationalities, different cultures, and a different primary school experience.
And in hindsight, do you stand by that?
Absolutely great idea. It was a very good experience for them, and they reflect very positively on it. And they're good people, and they're not just good people because of that, but that definitely was helpful. So during that period of time, I'm in Indonesia, and the problem of pollution is all around you there, and the government really doesn't have the resources to do anything about it, and the population doesn't have much interest in doing something about it. So I came across a company that was started by a New Zealander and was supported by a number of other people who were expats in Bali, and it's called Range International. They started their journey in about 2014 and became a listed company, I think, late in 2016. At the time, I thought what they were doing was great, but it was very expensive. The market cap was just not right compared to what their prospects were. But nonetheless, I followed it. Then towards the end of my time in Bali, the market price in that company had pretty much collapsed. They'd had a lot of technical difficulties, a lot of underperformance, a lot of forecasts that had been wildly optimistic. And the market price collapses from a market cap of 150 million down to 6 million.
Wow.
So then I felt like there was something to get interested in. So I started to invest in that company along with another guy who lived in a nearby place in Bali with me, who's now a director of the company also. And we felt that the problems that it counted could be overcome if it was properly restructured. Now that was in 2019, and here we are in 2025, and we have overcome the structural problems, and we're now making money in Indonesia, but it has been a journey.
It certainly has. It's a journey I have followed also. Tell us a bit about, so what is the actual product that Range makes?
What we do has changed a bit from when we first got involved. Initially what we did was we collected waste plastic from small pickers or disparate collectors from waste dumps, the sorts of plastics we wanted, which is essentially in those days was plastic film. They would bring the waste to our factory in trucks, we'd weigh it, and then we would put it on conveyor belts and put it into a massive cleaning process, and then it would be dried and shredded and then put into an extruder and heated and compressed and turned into a logistics pallet, similar to the wooden pallet that you most regularly see on trucks that CHEP and Loscam dominate. But our product was made from waste plastic only.
And so at this stage, this is the only environmentally friendly alternative to, I suppose, cutting trees down to make pallets.
Yeah, there are also companies that use what they call virgin plastic to make pallets, but that's not really solving the problem. It's just using more fossil fuel to create
displacing the problem in a
so
sense.
We really were going for a double-edged solution, which was one, to reduce plastic waste, and two, to address deforestation.
Both of which are obviously enormous thematics. And since you've been at Range, it's obviously been quite a turnaround story. You've got really big enterprise clients, many household names. Was this the first time you got involved in manufacturing since working with your grandfather?
Yes. And manufacturing, there are some skills you can use from investment banking in manufacturing, but not many.
I imagine.
The skills in the factory are the most relevant things to get right. Sure, the financial management of the company lends itself to tweaking using investment management skills, but really it's all about efficient manufacturing, and that's where the learning curves have been the steepest and actually the most interesting as well.
It's interesting though, because obviously you're not putting much stock in the current management of the company if it's gone from 100 million market cap to 6.
No, they're absolutely hopeless.
Yeah. But what makes you take this challenge on? You don't have to. You've made enough money. You've got a family. The kids are growing. It's, you can sail away into the sunset. Why take this challenge on?
Well, it was of great interest. It was great interest because it was an obvious problem that needed to be solved. And also, it, in my opinion, was an obvious opportunity because it didn't make sense that the world was using exclusively wooden pallets. So there was a profit motivation as well. An obvious problem, an obvious opportunity.
How do you stress test this idea? And not just this, but generally, what's the methodology for you if you come across something interesting, whether it's a trade or a business? How do you stress test it?
Well, in the case of this opportunity, it was quite difficult to stress test it because we really didn't understand what our COGS was in this business.
That's cost of goods sold.
Yeah, we didn't understand the cost of goods sold, and it took quite a long time to understand it. And when we did understand it, it was plain to us we had to get rid of certain parts of the business and just concentrate on other parts. So we got rid of washing plastic. We got rid of drying and flaking it, and we outsourced that to other parties. And now we just buy flaked recycled plastic. So someone else who's a specialist in collecting and washing is doing that for us.
And so what are some of the things, I suppose lessons that you take from your experience of the last 5 years turning this business around that, to people listening could easily be transferable?
Well, the first thing we've always struggled with is having sufficient capital.
Yeah.
And it's very hard to raise funds for loss-making businesses. And this business has been loss-making, at least at the headco level, since the day I was involved.
Mm-hmm.
And it's profitable at the major subsidiary level now, but I think we'll possibly still be in a losing position for another year or two because of very heavy depreciation schedules. So getting people to invest money in loss-making situations in old technology businesses, manufacturing is not very sexy compared to a number of other things that investors have embraced in the last 5 years.
Yeah.
Despite the good intentions of the story, that has been a massive challenge. Secondly, the challenge of getting the end customers to be able to shift their purchasing aspiration to beyond the cost of the good today to what the cost of the good is over the lifetime, the life cycle of the product. It has been very difficult because procurement managers, by and large, who we deal with, are very much constrained by budgets, capital budgets, operating budgets, and if a product they require to make their business work is cheaper, then it's a hard time to convince them to buy something that's more expensive, even though over the long haul it will be cheaper. So that's where we've had a lot of difficulty, and it's only because of the intervention of the sustainability departments in these big multinationals that we've been able to kick off a bit of a balance between that problem. But however, now we are getting some traction from all parts of organisations that are beginning to realise that wood is actually not that efficient.
I mean, it's one of those things. I used to hate when people used to tell me if it makes money, it makes sense. But I feel like ultimately for anything, whether sustainability oriented or not, to work at scale, it has to make money. Otherwise, it just does not make sense. So is it then to understand scalability and what it requires to get a business to scale, whether it's capital, whether it's the expertise, or whether it's understanding your customers' needs?
Yeah, it's absolutely about scale for us. And the founders of this business invested in huge scale initially.
Yeah.
And at no point have we had capacity utilization greater than 30%.
Wow.
So they spent a lot of money in investing in property, plant and equipment, which was way beyond what they required. And that was because they made big picture estimates of how much success they would have. So we've generally had our equipment underutilized, and we have generally, until quite recently, failed to make critical mass, which allows us to trade profitably. And one of the reasons is that we have been selling pallets to clients, whereas the majority of the pallet world is handled in rentals.
Right.
And rentals are attractive because they're less capital intensive for the clients. They don't have to put big investments into their pool of pallets. And you know, there are a lot of pallets in the world. There's more than 5 billion pallets floating around the world. And it grows every day.
Yeah.
So when you think about the cost of 5 billion pallets, maybe at $20 a unit compared to paying a couple of cents a day, it's very attractive for them to play the rental path, even though the NPV of the rental path is a lot greater than the sale. It just works.
Oh, I imagine it also, with maintenance, I think it would be pretty advantageous for them.
Absolutely.
I have two final things I'd like to ask you. The first one, I guess, is if you had $10,000, right? So we reset everything. All you have is $10,000 to your name today. Where are you putting it?
Well, it's going to be a very boring answer. I'm going to be putting it into gold mining companies.
Okay. Are we talking large caps, small caps?
Gold producers.
Okay. Why?
Well, I think especially on a pullback, these companies are already very, very cheap because they have been priced at a gold price less than half of where the gold price is now. And I happen to personally be very, very bullish on the gold price long term because of the fundamental problems in the sovereign debt market.
Mm-hmm.
I see no other solution than for gold to play a much bigger part. And for gold to play a much bigger part, that's going to require central banks to diversify much more substantially out of their fiat currency holdings. And if they were to, just to give you an example, if they were to sell all their fiat currency holdings, which I'm not suggesting they will, but if they were, that would require them to increase their current holdings of gold, which are currently 36,000 tonnes, by 88,000 tonnes. Now, 88,000 tonnes is approximately 40 years production if they were to buy every ounce of gold produced.
And that's assuming about a 2% inflation rate annualized.
That is a very hopeful number.
Yeah.
So, given I believe that there is a long-term trend for sovereign governments to need to have greater backing for their underlying currencies, I'm not saying it's going to be 100% gold backed. I don't think that's possible, but I think it's not implausible to assume that the sovereign debt market might be substantially collateralized by gold at some point in the future. That will require a lot more gold to be bought. Now, I'm not saying it's going to be done tomorrow, but I think pullbacks will be supported. Now, what does that mean for the gold miners? It means many of them could get nationalised in some countries because the central bank will want just an assured supply of gold. But where they're not nationalised, the profits, the amount of cash these businesses are going to produce is just incredible. And yes, I'm sure there are many technology stocks that people would find more attractive, but I think this is a very safe play which has a tremendous upside.
Are you saying that to the 17-year-old trading sugar futures?
Well, I just think, if you can double your money with risk of 10 to 20% drawdown, I like that risk-reward ratio.
The last thing I want to ask you is there's a lot of fear amongst a number of young people. If you could go back in time and say something to your 30-year-old self, what would that thing be?
Well, I think what Macquarie was good at emphasising with people was a risk management strategy that was what we called loose tight. So it was loose in that they would give you a high degree of freedom to operate in your area of specialty. But the tight bit was that there was a risk management framework that ensured you operated carefully within that framework. So you could be very, very aggressive, but inside a box. So loose tight works. And it works especially where people have a specialty and where they have a focus. So I would say to a 30-year-old self, remain very focused in what you're good at, what you have an advantage at, and aggressively pursue the opportunity, but with risk parameters that are well defined and followed.
Amazing. Richard, every time I talk to you, I come away, that much more informed, and I'm really thankful. And I know a lot of people, have come across you throughout the years and feel the same way. Thank you so much for doing this, and thank you for being who you are. And I'm hoping that Range has many, many big years ahead. And next time, hopefully, we're talking on a lot more positive note for that.
I hope so too, Ali. Very, very good to spend time with you, and I hope we are able to talk again.
Thank you.